Good morning, stock traders. We are here on another special exclusive CEO interview at STT Radio. Thank you for joining us this morning. This morning we're here with a Mr. Roy G. Warren, the CEO and president of ATTD Drinks Incorporated. We did an interview with him earlier in 2012, and he's got several quality updates for our traders this morning. Mr. Warren has a diverse history and background in the beverage industry, focused on milk and protein ready-to-drink beverages. We're all familiar with the Phase 3 Phase 3 post-workout drink. In this interview, I'd like to cover ATTD Drinks' business strategy, their Phase 3 brand development and attributes, as well as their history and future opportunities for ATTD Drinks and the milk protein sports drink category. Welcome to Stock Trader Talk, Mr. Warren. Thank you for joining us once again.
Well, it's my pleasure to be back with you guys.
You'll have to excuse me. I can't talk this morning. I'm still waking up a little bit. I haven't had my coffee. But looks like you also put out some press this morning. Why don't we just start out the show by you talking a little bit about your new distributorship and the convenience stores that you just put Phase 3 into?
Sure. Part of the growth strategy for our company is to, number one, establish a brand that is unique and very, very consumer friendly, and we believe we've done that. We've economically validated Phase 3, we think, over the last 2 or 3 years, and very excited about the consumer reaction to it. But as everyone knows, especially in the beverage RTD business, to a great degree, it's about distribution, direct store delivery, they call it traditionally in the beverage, especially in the independent and consumer convenience store market. So we've been working hard to increase our network of distributors, and this announcement today is another indication of the progress we're making. Daly's is a nice chain. It's a petroleum convenience store chain in Tennessee and Kentucky, and very, very well-known kind of grassroots organization out there, and they rely heavily on a couple of beer distributors predominantly, but they both have non-alcoholic divisions that handle products like Phase 3. So we're delighted, really. I mean, these are first-class companies, all three of them, Hands and Daly. So we're excited about the ability to bring the product to the consumer so the consumer gets a chance to vote. That's the biggest problem, and it seems like anybody that's watched the beverage industry understands that once you've got a brand that works, the key to the city is distribution and managing that properly and supporting those partners properly, and that's all part of what a brand owner and a brand company like ATTD needs to do.
Okay, great. Yeah. I'm not familiar with the Daly's convenience stores up here in the north, but it sounds like a quality store chain. And I know you've been putting out lots of press related to, new stores that you're popping the product into, new distribution chains. We'll get to that a little bit later. I just wanted to update our shareholders in ATTD that are listening on this news before the market opens today. But why don't we just cover a brief background of your company and how Phase 3 came to be? And when it came to be, just for our listeners who might not be as familiar with the company.
Sure. I ran a company called Bravo Brands from 97 to 2007 and left there over a dispute with the board of directors. But during that process, I learned an awful lot about what was going on in the beverage industry. And there was this sort of two major trends that were relevant, in my view, which caused me to want to start ATTD and really focus in on Phase 3. First was that there was clearly a departure from what I call empty-calorie refreshment drinks, the traditional Coke and Pepsi and branded sugared carbonated sodas were declining in unit volume every year and had been for quite some time, beginning in the early 2000s. So there was an opportunity to sort of combat that with healthy, functional drinks, and that's where you saw the dramatic expansion of sports drinks and energy drinks and juices and iced teas and vitamin fortified waters, all those kinds of things. Actually, it was interesting. While the overall beverage industry was growing quite dramatically, the empty-calorie beverage or the refreshment drink side of things was declining. So there was this burgeoning category called functional and healthy, good-for-you beverages happening, and that continues to this day. So that was one of the trends that I recognized primarily through my education I got with the Coca-Cola Enterprises people. And then secondly, it was obvious that there was a rising tide in terms of consumer demand for protein. And I had been working with, in my previous company, to introduce shelf-stable, consumer-friendly, vitamin-fortified flavored milk products because of the obvious benefits to milk, trying to deal with some of the obstacles, that being the shelf life and the sugar and the lactose and things like that, and developing kind of a consumer-friendly product. And it became obvious to me that we did some things right at Bravo, we did some things wrong there, and when I started ATTD, we were starting with a clean slate to really get it right. We think we've done that with Phase 3. There is a very direct correlation between the attributes, functional attributes of milk and post-exercise recovery. So certainly there were some issues we had to deal with. We decided to use a filtration process to be able to dial in the strategically proper balance between protein and carbohydrates. And yet we didn't want to start adding chemicals and protein and calcium and electrolytes, so what we did is effectively super concentrate what was there using this filtration process. And so in so doing, we've delivered what was the first and is now one of the very few real milk-based sports drinks. Sports drinks, as you know, exploded over the last decade too. And there's an opportunity for the next sort of generation sports drink, and we think that protein-oriented drinks are where it's at. And we think we've got the most advanced product there is. Our product is the only one, as far as I know, that retains its milk status from a standard of identity perspective with the FDA. And we think that we've got a product that tastes better, works better, is more consumer-friendly, more eco-friendly, all those things, and has a 12-month shelf life. So it delivers a real wallop of protein, but it delivers it in a way that's perfectly suited for post-exercise recovery. So we think there's an opportunity to really exploit milk generally as it relates to post-exercise recovery with Phase 3, and obviously down the road we have views toward utilizing that learning that we've had and that technology that we've developed and packaging that we are excited about to implement other kinds of fortified drinks that would apply to different demographics or different functions. For example, one would not necessarily have to have a 35-gram protein load in a 14-ounce drink if it was designed for something other than sports recovery, like maybe a meal replacement, for example, or a children's product might want to be slightly different fortification, and we can do that using ultrafiltration, so we can kind of dial in the science that we're looking for. So the opportunity to become the Arizona iced tea, if you will, of the milk business remains. There's just no dominant brand. You know, you've got the Red Bulls and the Monsters, and you've got the Vitamin Waters and the Nantucket Nectars and the Arizona iced teas, but nobody's really done functional branding in milk, and we think that there's a huge opportunity to capture that space, and that's what we're all about.
Wow, that's a fantastic idea. Branding different types of milk recovery drinks and other health drinks. Coming from a nutrition science background, you see these cycles not only in the exercise field but also the nutrition field, and milk's kind of been in and out and in and out as far as a pre or post workout drink, because obviously it has the high quality proteins right up there with eggs and whey protein, and you have your whey and caseins in milk. But more recently, I think milk's coming back. They're hitting a high point in that cycle, and hopefully it can stay up there with some of the research coming out supporting significant muscle growth, sometimes even better than like a whey protein post-workout and whatnot. So it's really interesting, and I love the idea. It's awesome. It's great that you guys are starting to expand a little more in the U.S. I'm going to have to try that because I'm kind of a muscle milk fan, to tell you the truth. I don't know how you feel about that, but...
Well, let me tell you, muscle milk is one of the great stories. We would love to be as successful as muscle milk has been, but we think we've got a superior product, both from a nutritional point of view and from a flavor point. If you do a side-by-side taste test with Phase 3 chocolate and muscle milk chocolate, for example, I think you'll see what I mean. It's a pretty stark improvement in flavor profile. Our, as you referred to milk kind of becoming the in thing to consume, that's kind of along the trend of all things natural and healthy and clean and real, so to speak. And in our product, the way we use the ultrafiltration system, you wind up with the nutrients of over a quart of milk in the protein, the calcium, the electrolytes, and things like that you'd normally find in regular low-fat milk. And we did a clinical study about a year and a half ago now, an arm's length clinical study where we tested against muscle milk and Gatorade and chocolate milk, and took athletes and worked them to exhaustion and rested them, and then worked them to exhaustion again after we fed them these various products. And we found that statistically, phase 3 outperformed virtually anybody else in the field significantly. And it also found that because protein properly administered is difficult and makes the body work hard to digest it, that it actually became a fat burner as well as a lean muscle builder and healthy recovery food. So we have proven that there really is a lot of clinical science to the exploitation of Mother Nature's most perfect food.
Oh wow, awesome. Yeah, and I know filtering out the lactose, obviously, that's another good thing that when you compare it to milk and whatnot, lots of people lactose intolerant don't digest that very well. So the product does seem high quality. You mentioned some athletes that you were doing some research with. Why don't you talk a little bit about some of your endorsements with various athletes throughout the past and what athletes are supporting phase 3? I know you guys recently related
the athletes the athletes we used in the study were just high-end runners and bikers. They were not professional or famous, but they were serious athletes, and we did that to be able to prove that at the very highest level that this product would have a point of difference. We have sponsored a number of events around the country, especially on the East Coast. Our strategy is to build the awareness and create a buzz on the East Coast first, and then start to move west until we get some sort of national distribution. But we have done a deal with a couple of professional athletes, and we really have had some really positive reaction to people. Paul Pierce, for example, was a Celtic, and he has sponsored us or endorsed us, and we've had Scott Westcott, the Olympic snowboarder, and a number of other athletes that they've really gotten behind the brand, and not because they're necessarily looking at it economically. We don't have the resources to pay these people the way some of the big guys do, and that's held us back in many cases. But we have found that they really like the product and they appreciate the innovative nature of our company. And Paul Pierce, for example, is a chocolate milk drinker, so this was a natural for him. He just gets a whole bunch more for his buck, so to speak, in terms of consuming phase 3. So we're going to continue to do that, but we have found really that it's a business of trial. What we need to do is get people to try this. Once they do, they feel better, they love the mouthfeel, they love the taste, and they buy the product. So it's a matter of sampling. So we do a lot of sampling. We did the Boston Marathon, for example. We're going to sponsor a series of kind of a CrossFit championship that's going on up in New York this spring, and we just did an expo with MMA down here in Boca that featured Randy Couture, and we've done a lot of triathlons and bike races and road races where in fact we did one last Sunday up in Boston. It was a 2,500 person run raising money for the Special Olympics, and we had about 50 cases of product up there, and we gave it away at the finish line, and people just loved it. So that's the most beneficial way. The grassroots approach that we have is the way, because it's not just another protein drink. And while we know the benefits of a milk orientation here, a lot of people say, well, so what if it's milk? They don't understand the science. And so once they try it and they drink it and they feel it, then they understand. They don't care whether it's made from milk or rubbing alcohol. They just care that it works for them, and that's really the benefit that we have.
Okay, fantastic. Why don't we move over to your near-term business plan as far as expanding? I know you guys are, for the most part, out east in the United States right now. What are your plans? Near-term future, long-term future, where do you guys see yourselves expanding to?
Well, we think phase 3 sells, as muscle milk does, I might add, in virtually every channel of trade. All right, we're in Walgreens system-wide in Florida in their profit zone coolers. Those are the coolers that are in the very front end of the store by the checkout counter. And we're looking at other chains, other drug chains like Walgreens that might be interested in that in other parts of the country. We're also in Tedeschi's Food Marks, which is a great small C-store / food market up in the Boston area, and they've done very well with the product now for about a year and a half, I guess. And so we see the product selling well in those kinds of markets. We've also been recently authorized in 2 or 3 different Kroger marketing areas with Kroger. So we're in Georgia and some other markets for Kroger in the grocery store business, and we're also looking into as many C-store chains as we can. We think that our demographic is predominantly sort of 15 to 30-year-old active lifestyle people, and to a great degree they frequent the convenience store market. So that's why the Dailies opportunity is interesting to us, and we think that there is a big opportunity for chained accounts as well as independents using these direct store delivery accounts. We also recently announced that we were in Duane Reade, which is a uniquely powerful and impactful food market and pharmacy and chain up in the New York City area. So we're starting to get some credibility. There's a kind of a proof of concept issue that's been happening with us. We've been going through a very difficult economic time, as you can imagine. We've had a hard time raising capital, and it's had an impact on our share price, obviously, and it's had an impact on our speed to market, so to speak, as to reaching critical mass. But we think we're starting to see some acceleration now because people recognize that it's no longer as risky as it was to bring on an innovative new product that nobody's ever heard of. I mean, we were the only ones to come out with a milk-based recovery drink. In fact, as far as I know, we were the first RTD recovery drink that was launched in a major way in this country. So we've come a long way in about 3 years, and we think we've got a long way to go. We just really started to be able to show year-to-year comparisons where we've got increase in same-store sales and up in Boston, for example, and things like that. So we're looking to build our sales to connect sort of the Boston, New Hampshire, New York region down through the East Coast into where we have Florida, Georgia, South Carolina, North Carolina, Kentucky, and we're going to be moving up the coast to make that connection because there is an awareness issue. There's an education process that goes on with any innovative drink. By definition, an innovative drink requires communication. You know, if it's going to be new and different, then people need to know what the unique selling proposition is and why it's interesting, and that requires education and marketing dollars. And we've been stymied a little bit with that, but we're coming out of that now, and we feel good about having the ability to be able to promote our product and grow our sales really on the back of the contiguous markets that are doing well. It's easier to have a conversation with CVS when we can tell them that we're doing well in Walgreens, for example.
Yeah, you're definitely in some high-quality stores out east right now, and sometimes people forget that it takes money to make money. But your numbers seem to be improving as far as revenues and stuff, so you're obviously expanding out east. But I would assume that once these products really hit the market out east, you will look to move west out to some of the states out there.
We will. We'll either gradually go west because we find a national account like a 7-Eleven or a Walgreens National or something like that would take us across. Of course, Kroger could do it. We're not national with Kroger. We're regional. But we might very well find ourselves moving west that way, or if we don't have a national account, we'll leapfrog and jump right out to California. It's not hard to understand why a healthy, natural product that has such efficacy would do well in the California market. But, you know, from a comparison point of view, since the last time I talked to you, I'm not sure how many distributors we had at the time, but it might have been 5 or 6, and now we've got 24 active direct store delivery distributors, and we're in about 30 major metropolitan areas around the East Coast here. And I added up the population numbers in the cities that we have access to right now, where they're actually selling Phase 3 in now. And a lot of this has happened just in the last 90 days, so it's taken a while for it to take hold. But we're in touch with population in these major metro areas of about 50 million people now. So we've made some real progress doesn't show in the stock price, but it certainly is going to show in the top line in the income statement, I think, in the year 2013.
Okay. Yeah, and I think you can order the product online as well, correct?
Yes, there are about 5 different vendors that handle the product online. We sell it directly from here using Amazon, and there are a number of other companies that do that as well. And we've seen the orders increasing there, but normally they're repeat orders. I got an email the other day from a fellow who said that he's on his 34th case of Phase 3. You know, he's just buying it on a regular basis because he can't buy it locally. And you know, we found that happens as we put the product into a marketplace. It starts off slow, almost inevitably. And it takes a while for word of mouth and trial to start to take hold, and then people start to believe in it and understand it and communicate to others about it, and then you see a growth. And it continues to grow. That's the interesting thing about this brand. I've had other brands that we put in the marketplace, and they would spike to a certain level and flatten, whereas Phase 3 seems to grow and grow and grow. It's just a matter of time, and of course time is money, but it does seem to sell itself, so to speak, as time goes on in some of these markets, especially convenience stores.
Yeah, once some of these bigger stores accept the product, I can imagine it getting easier for some of the other big names to accept it as well.
I think it's interesting. There's one thing I've noticed, and that is that you know, Pepsi is distributing Muscle Milk, and they're doing a fantastic job across all channels of trade. And I don't know, you know, they've done extremely well here in Florida, for example, with Muscle Milk in Publix, and I would not have expected that. So you know, there seems to be a demand for the product as a meal replacement, and lots of different applications for people, not just the pure target demographic that we have in mind. And I noticed recently we saw that Coca-Cola got involved with a product called Core Power, which is another milk-based. It's not 100% milk, but it's a milk-based protein drink. And you know, the big guys are paying attention to this category. I don't think there's any doubt about it. And there's tremendous potential. I think it's got a long way to go. And to see the big guys make investments in this category is actually encouraging to me, because we've got a far superior product to anything they have.
I was going to say, you got the Coca-Cola background with Bravo. Why don't you hook us up?
Yeah. I don't know how they did that. I do know that there is a connection between the fellow who's running the Core Power brand and the Coca-Cola people. I think he worked for their marketing department at one time. In fact, I think he ran their marketing department at one point. So there was a little bit of a fraternal relationship, I think, up there. But you know, I did a deal with Coke Enterprises once, and it was a gratifying and delightful experience for quite some time. It didn't end particularly well because of some conflicts that evolved between Coke and Coke Enterprises. But for a while, it was great, and it's good and bad to have one gigantic customer. You know, I kind of like the idea that we're going to build a group of independent distributors, and not all going to be DSD. We'll have some warehouse distributors and other kinds of distribution channels. We'll have a mishmash of strategy, but nonetheless, I'd rather grow a little slower and wind up with a few hundred distributors and have a little independence, as opposed to being completely dependent, as I was at Bravo, on Coke Enterprises.
Yeah, that's actually a smart strategy, as long as you're a patient man.
Well, you know what? I wasn't patient before, and you know, I like to tell people I wasn't as smart as I looked when we did the Coke deal, and I wasn't as stupid as I looked when it came apart. It's just a circumstance.
Good stuff. We've touched a little bit on some of your alliances and strategic partners and whatnot. You mentioned Paul Pierce. You mentioned, you know, you guys have sponsored some events, the Boston Marathon, recently a mixed martial arts event. Are there any other, you know, strategic alliances or partners that you guys currently have, or that you've been in talks with, that shareholders might like to hear about?
Well, we're really going to focus on the things that we know have worked for us, and that is, while we're going to always keep our eye out for endorsements like the Paul Pierce, because of such an awareness, credibility that comes from that kind of thing. Our primary approach is going to be on radio. We found that talk sports radio has had very strong impact for us up in the Boston area. We're going to do more of that. We're going to do more sampling. We're going to do more social network work. That works very well in the college arena, getting trial and buzz going. And so we're going to continue with our guerrilla marketing, and the media that we do will be mostly talk radio and sports, I think. And obviously, as we get a little bigger, we've got a little more cash flow, then we can get more creative and have a little more impact. But while guerrilla, once again, takes time and it takes longer, it has a lasting impact. And that's what we're looking for, those early adopters that really embrace the brand, and they'll become our ambassadors.
Okay. Well, before we get into some of the actual share information, I know you've talked about, we've talked about expansion quite a bit. Why don't you just give us some brief timeline goals as far as 1 year down the road, 5 years down the road? Where do you see this product 1 year down the road, and then 5 years down the road? Obviously, that's going to be a little bit more difficult to predict, but just commenting on some of the milestones and catalysts that shareholders can expect within the next year or so.
Well, our goal for 2013 is to have a robust business up and down the East Coast, and then beginning to branch slightly westward as states that are contingent or contiguous to the East Coast states start to find interest in the brand. So we're looking to pick up more larger regional brands, especially in the convenience store business. And our objective is to stick to our knitting. We will be launching another flavor in 2013, so we'll have 3 flavors of Phase 3 in the marketplace. It's been developed, and it's a fantastic banana flavor that we're looking forward to. And then we'll we look to get to the end of 2013 on a run rate at least of a cash flow break even or a profitable financial model. And then by then we will have done 2 things. We'll have created an economically viable business. We will have validated the brand as a winner, if you will, and we will also have communicated clearly to the national accounts why they should be interested in taking us out. So at that point, as I said earlier, by the end of 2013, we'll be looking to see, can we find a national account or 2 that will take us nationally, or do we just find another co-packer, which there is a co-packer that we can use in California to produce the product and start focusing on the West Coast and do the same thing out there. So it's really, we're pretty opportunistic. We're one of the advantages of being small is you can be nimble, and we know how nimble we can be and how impactful and powerful we can be once we've got a cash flowing business. And so we're gonna focus on that first. We're gonna get there. We believe in 2013 by going up the East Coast and really exploiting this market here, and then as things come along, we'll take advantage of. Where are we going to be in 5 years? I mean, heaven knows. I wouldn't even dare to say. I will say that I think that if anybody is serious about looking at this category, if they look at our science and they taste our product, it's not hard to understand why we have a superior brand in the marketplace. I haven't found one person that ever tried Phase 3 that didn't think it was a preferred flavor profile, and obviously the science is a no-brainer. So I think that we could easily become the leader in this, what I referred to earlier, the next generation sports drink space. And obviously, if that happens, then the sales volume numbers will be significantly amped up.
All right. So it sounds like you're gearing towards entering or just getting close to that exponential growth phase by sometime in 2013, late 2013. So it sounds pretty positive. I really like your idea of potentially making a longer line of functional milk-based drinks. When do you expect to start considering that in a little bit higher fashion?
We'll do it as soon as we can afford to do it. We don't want to take away from the effort that we've done to pioneer Phase 3. We want to make sure that anything that we do in terms of introducing other applications of this technology is properly funded. The difference between a successful brand and a failing brand can often be the sales and marketing budget behind it. So we want to make sure that if we introduce another brand, that we can we have the resources to support it for all of our partners, for our retail partners, for our distribution partners, and of course to make sure the brand has value. We think that's going to happen somewhere in the 3rd and 4th quarter of 2013. So I would say, to answer your question, I would look for us to introduce another application of this ultra-filtered technology in the 4th quarter of 2013.
Oh, very cool. Do you guys have any significant, funders or funds that are involved with your company that you can go to and get those funds needed?
Yes, we do. We've been dealing with people at Attitude that I've dealt with for years in my previous life, and that they've been involved in this company for quite some time now. We've also got a pretty interesting reputation. You can imagine during the Bravo deal, when we signed up Coca-Cola, all of a sudden we were pretty high in the spotlight in terms of some of the more traditional equity funds, and some of the brokerage firms and the investment bankers were contacting us, and we did do a $50 million raise with Cowan and Company when I was at Bravo back in 2006 and 2007. So I think that we'll have the opportunity to go to the marketplace as soon as people recognize that what we have here is not a pipe dream, but it's a real company with a real brand and a real opportunity. I think that our ability to go to our current investors and raise capital in a more economically feasible way moving forward will be available, and also to bring in some of the larger, more traditional kinds of funders, which is what happens as small public companies evolve. You wind up moving up the ladder, so to speak, in terms of how you do your corporate finance.
Okay. Well, very good. It sounds like you got your ducks in a row for some serious expansion in 2013, and we definitely look forward to hearing about that. Let's talk about your share structure very briefly. What is your current share structure?
Well, we had to raise capital to survive in the sort of 2009 to 2012 period of time through convertible notes that were convertible at a market price. So we've seen a tremendous amount of selling in our shares it took so long for us to bring phase 3 to the marketplace. We really did do our homework, and we built the brand on very solid fundamentals, but it took time. And of course, we were in an economic environment where people were not taking risk, and innovation is risky, so that added to the time it took. So we wound up having to raise a few $1,000,000 with these convertible notes, and it's taken a while for those notes to convert out, and it's taken many more shares than we would have originally anticipated. But it is what it is. We've gotten through it, and we'll be able to move forward. So we've increased our authorized shares. Back in March, we did a proxy to increase the authorized shares out to 5 billion. I guess our last quarter we were about 2.2 billion or so outstanding, and we'll continue to see that number go up as long as those convertible note holders convert. But I think at some point institutions are not much different than individual investors, and that is, at some point you are less worried about losing money than you are about making money, and your motivation switches from fear to greed, which is the only two motivators there are in the marketplace. And I think as our stock starts to look more, or our business starts to look more attractive, I think our stock price will reflect that. I think that beverage companies generally trade as a function of top line. As our top line goes up, it stands to reason that our market price would go up, and as people start to realize that this is a viable brand, I think it's very reasonable to expect that we'll see a significant reset in the valuation. So even though we have a lot of shares outstanding, I still think that our company sitting here with a $1 million market cap is just ridiculous. I think that the prospects of our brand are way beyond that, and I know what it would take for another beverage company to develop a brand that sits in the position that we sit in, and it's considerably multiples, tens of multiples more than what that we're market capped at. So I think that the supply and demand problem has created an oversold condition in our share price. I don't know how long it's going to stay there, but eventually it'll work its way through, and then obviously someday we'll have to do some restructuring to find a way to right size our capital structure so that we're not sitting with billions of shares outstanding. But that's not in the near term plan. We're just going to keep on building the business and hope the market capitalization starts to reflect the real value here.
Okay, great. Yeah, coming from a shareholder and trader standpoint, one of the key things we look at is obviously growth and revenues, and it looks like your revenues have been growing up to about, I think, 120,000 per quarter versus 30,000 in 2011. So definitely the revenues are increasing, and $1 million market cap. Yeah, It's definitely got some room for growth, and it's hard to put valuation on a company like this that's in such early stages of growth. But anyways, who is your transfer agent, and are they open for investors to inquire about the share structure of the company as we might see some of these changes from these notes hitting the market?
Pacific Stock Transfer has been our transfer agent, and we've not put any restrictions on Pacific. So whatever their standard policies are, we let them implement. One thing I think is really relevant here is that in the early days of developing revenues, one is in a brand development position is required to do some promotion, some slotting, some advertising, some discounting. All of those kinds of promotional activities, due to the rules of the SEC reporting rules, are deemed to be a contra revenue. So the numbers that you're referring to are net numbers. Our gross numbers are actually considerably more than that, but they have to be adjusted back down to accommodate for any free goods, for example, that might be given to somebody for sliding and things like that. So when you start to ramp up, any brand developer will tell you that you start to ramp up and you find that your revenues are understated because of all these contra revenue calculations.
Mm-hmm. Well, why don't we talk about the revenues a little bit? It looks like last quarter you did about 120,000. Last 6 months you've done pretty close to $250,000 in revenues. Obviously growth from the recent past. What do you expect going forward in 2013? What sort of revenue numbers do you see?
I haven't done any forecasting yet. I don't think I'm going to start today. We're going to see some pretty dramatic growth, I can tell you. I mean, the fact that we've got 24 distributors and not 5, the fact that we're opening new accounts like Duane Reade and Kroger and Walgreens and others should give you an indication that we're seeing some penetration. But it's just too hard. It's too early. It's not fair to shareholders for me to be guessing what the top line will be. I will tell you that our internal numbers indicate that we should not on an annual basis or even on a fiscal basis, but we do think on a run rate basis by the end of the quarter we'll be cash flowing. That's a significant achievement in the development of a public company, especially in a single brand kind of brand like ours.
You said that pretty quickly. By the end of the quarter, what?
By the end of the first quarter, I believe that we'll be cash flowing. The fourth quarter 2013.
Fourth quarter 2013, cash flow positive is what you're saying?
That's what I'm saying.
Oh, okay. Great. I mean, I'm just kind of a numbers freak, so I'm just gonna have you guess on some potential numbers. Are you expecting, like $1 million in revenues 2013, couple $1 million, potentially more?
It'll be more than that in order for us to cash flow. Yeah, I think the numbers north of it's north of $5 million for the year.
I'm not going to hold you to this by any means, and shareholders shouldn't either. I just want some guesses thrown out for numbers. We like to hear that.
No, I hear you, and everybody likes to hear it, but it's just too hard to be to get it close. And so this is not my first rodeo, and I've made these mistakes before, so I'm going to be very careful about it. But I can tell you that for us to break even, you wouldn't have to spend much time on our P&L to figure out the numbers. Got to be significantly north of that. And I'm not saying it will be for the year. I'm saying it will be on a run rate basis. So that's an important distinction. I think that the fourth quarter, if you multiply it times 4, will put us at a level where we could be cash flowing.
Okay, very cool. All right. Well, yeah, that'll work. We'll just have to deal with that. He said more than a couple million in revenues to be cash flow positive by 2013 fourth quarter. So yeah. We're holding you to that. No. Anyways, me too. We've talked a little bit about your balance sheet already and some of the notes that are out there and whatnot. Let's move on. You do have a website, www.attitudedrinks.com. Is that the best resource for potential investors to learn more about your company?
Yes, I think it is. We have a remarkably large number of interested investors. We get 4 or 5 inquiries a day from people wanting to try the brand and try the product. So we have an investor pack that all you have to do is send an email to myself or to the info@attitudedrinks.com address, and we're happy to send off a sample pack with marketing materials and and information on the business and a sample of each bottle. So we found a lot of people have taken advantage of that. I mean, thousands of people during the last 12 months, and it seems to be the single best way for people to understand what our business is about.
Okay, just moving on to the last question. We always like to do a little 5-minute elevator speech on why someone should invest in your company and be interested in Attitude Drinks. Why don't you just give us your last little bit on the company, and hopefully we can bring you back again at some point in the near future after some further developments take place. But why should someone be interested in investing in Attitude Drinks today?
Well, just from a pure investment standpoint, there's obviously a fair amount of risk anytime you invest in a company like ours that's developing a new brand. It hasn't reached cash flow yet, but that's why stocks are so cheap. That's why this company is so undervalued, because people are constantly weighing that risk. That said, the opportunity for one to invest in a company with a brand that could very well be the leading brand in a category, like that white space discussion I had earlier regarding milk, is a big idea. I mean, we all know the value of the Coca-Cola placed on vitamin water, for example, and Fuse when they acquired it, and we all know what Arizona iced tea is worth, and Red Bull, and the impact these leaders have made on their category within the beverage industry is enormous, and it's all about dominating a category. So I would suggest that there are few opportunities where someone can invest in a company, understanding the risk and recognizing all of the financial intangibles here, but to recognize also that Phase 3 could very well be the pioneer and the leader in the protein delivery RTD industry, certainly as relates to sports drinks or that next generation sports drinks that I've been talking about. I think that's a big opportunity and a big idea, and this thing was built and designed to be a big story. We didn't expect it to achieve cash flow at $1 million or $2 million. We know it's going to take a significant amount of impact in the industry to win, and when it does, it's going to have an extraordinary value in the marketplace. That's what we're all here for. That's what all of the people at Attitude are about. Nobody in the board or nobody in our management company has done anything but buy Attitude shares. There's never been a sale made by anybody in the company, and we believe strongly that we're onto something that's going to have considerable valuation reset over time. We understand that we've had lots of obstacles, and you don't have to be very, very well educated to read our quarterly reports and see the difficulties. But nonetheless, the story is all about leverage, and the leverage is in the brand, and Phase 3 is a superb product. So we're excited about that, and we think that this is a ground floor opportunity.
Okay, great. Just commenting one more time on the share structure, and obviously the outstanding share count is going to increase. Would you guys ever consider some sort of buyback program when you actually do become cash flow positive? Sometime a few years down the road. Would that be?
Well, we're going to have to do something. There are lots of different ways to do it. We're not going to do anything just for the sake of making our share price. We're not going to manipulate the share price higher just for the sake of manipulating. But there are ways to do it. Buybacks one way, and we would do it with the advice of an investment bank because we were on the verge of doing something really significant, and we would do it to do the right thing for the shareholders, of which we are all members. So the opportunity to increase the share price through a reduction of shares outstanding is an interesting idea. The problem is when you're needing to invest operating cash flow in your business to grow it, it's tough to make the decision to take those take those dollars and buy shares. But for example, if there was a lesser expensive capital available to us through a financial partner, then it would make strategic sense to take those dollars and buy back some shares and fix the market capitalization. So the answer is sure we would.
Okay. All right. Yeah, that's just something that I always like to ask companies and CEOs, make sure they're out there for the shareholder. Anyways, is there anything else you'd like to add? We've covered a lot of the new information to do with Attitude Drinks. We've had 2 pretty fantastic interviews with you. You're fantastic speaker. You're really good at describing what your company is all about. Is there anything you'd like to add before we go off the air today?
No, I'd just like to say that we've had a lot of exposure in the marketplace. The shareholders have been terrific. We've had a tremendous amount of interest, and I think that the train is about to leave the station. I think it's finally going to be a time when people can be rewarded by all of their patience. So I appreciate the support of all of our partners, especially our shareholders, and look forward to rewarding them with some appreciation in the share price.
We will end on Mr. Warren's quote, "The train is ready to leave the station." Anyways, we'd like to thank you for joining us once again here this morning at STT Radio. I'd like to thank our audience for tuning in this morning as well. We will have an archived version, actually several, of this interview, so you can listen to it at any time. Thanks for joining us, Mr. Warren.
I very much appreciate the opportunity. We'll see you again.
All right, sounds good. All right, folks. That is CEO Roy Warren of Attitude Drinks, stock ticker ATTD. They did put out some press this morning, so make sure you go check that out. But have a safe trade, and we will see you next week, Monday, 9 a.m. Eastern Time. Have a safe trading day. All right.
Thank you for listening to Stock Traders Talk Radio. All views and topics talked about on Stock Traders Talk Radio is solely for entertainment purposes. We are not professional financial advisors and always recommend you seek the advice of a professional financial advisor. Never invest in any stock featured on our show unless you can afford to lose your entire investment. The information contained on our show is based on sources which we believe to be reliable, but is not guaranteed by us as being accurate, and might not be a complete statement or summary of the available data. Stock Traders Talk Radio advises that the investments in companies profiled are commonly considered to be high risk, and use of the information provided is at the investor's sole risk. Thank you for listening to Stock Traders Talk Radio.